A very warm good afternoon to all the participants who have joined in today for a very special and interesting session that we have lined up for you. In line with some of the plans that we had regarding our CPE structure, today's program is specifically dealing with the automobile industry, and we've got some of the titans from the automobile industry, I must say, to address our members here today. Both of them are professionals and they know what are the day-to-day challenges that we'll be facing as professionals and what they expect from us from the industry. And to kick off this program, we have with us our dynamic chairman of SIRC, CA Dungarchand Jain, who's once again joining us live from the airport today. And we also have our beloved Central Council member, CA Dayanivas Sharma sir, who's joining us from Hyderabad, I think, after his tour of India in the Central Council role. We have two excellent speakers, CA Ravisankar sir and Shri TV Venkataraman sir. Both of them are doyens of their industry with us also. I request our chairman, CA Dungarchand Jain, to please share his opening address.
Yeah, thanks, Abhishek. In fact, I welcome you all to this important CP meeting because we thought that the more programs are there only for the practicing members. So we thought we'll have some programs on industry members as well. And I was in touch with the panelists today, and they both were kind enough to give us the consent on 12th of January today. And today's day is another very special because today is the birthday of Swami Vivekananda ji, who kind of preached that his education, and we have one CP today where the learned speakers take us through the accounting and auditing issues which automobile industry is facing, and they can also give some suggestions which we will take it through the regional council or the central council as may be required. Abhishek, over to you.
No, you are muted.
Abhishek, you are muted.
Yeah. Thank you, Chairman. Now I request our Central Council member, CA Dayanivas Sharma sir, to please share his special address today.
Thank you, Abhishek. And Chairman, thank you very much for involving me in this interesting session. Fortunately, directly and indirectly, I'm associated with the automobile industry as a first advisor of Kia Motors also. And then apart from that is like, couple of interesting dealerships which I audit on a continuous basis. I have little knowledge, might be not equivalent to Venkataraman sir or Ravisankar sir, very little knowledge which I have. And the kind of drastic change which is coming through, which we have seen particularly, and first of all, my apology, Venkataraman sir, welcome to ICAI. Thank you very much for joining us today. And equally, Ravisankar sir, welcome to ICAI for this interesting session. And my compliments to the chairman and secretary to do this kind of programs, which are very interesting. I think industry-specific programs are going to be the future of this profession also. Over a period of time, members in industry or members in practice, I think everyone is looking into a lot of new things which are coming up. So this model, which has been actually created by SIRC, real compliments to the chairman, secretary, and all the SIRC members to actually think in this line to make it industry-specific programs. And we are moving in a new era, and new thought processes are coming up in the entire process. But let us start with something which is, a little sad with regards to what we have seen in this COVID times. That almost like 40% decline in the industry was something which was alarming, and everyone were lost in their mind what is happening and how it is moving. So the factor is like, when the manufacturers were there, they were thinking what is going to happen next. But the second side of this impact was the used cars business actually shot up like anything. And we cannot even imagine, because people who are riding on bikes or might be traveling using public transport, they thought that, they are going to take the used cars or might be used vehicles, which will be more beneficial for them. And more importantly, when we have seen the first change with GST coming in, where we have seen one fact is because the warehousing model actually undergone change based on the usage or consumption tax is actually coming into play. So that was the first trigger, followed with this COVID, which is again a second trigger. Third trigger, which I personally feel is the biggest trigger. I personally, actually, I'm a little surprised, and I also want to very closely watch this. I've seen the time of pager, and pagers were actually discarded, and mobiles were being adopted by India very fast and very quick. Now, when you talk about the two-wheelers or a four-wheeler, or even for a small buses which are being operated on electronic mode, so electric vehicles are going to be the future of the entire thing. So now, what is this actually meaning? Is something very, very important and critical. Why I am saying it is important and critical is only for one reason. The first thing, the used car business model is actually undergoing to change in a very big manner, and the accounting and it was an unregulated business. I think both of you gentlemen will agree that from an unregulated business, it is going to become a more regulated business, and it has actually been seen with by car 24/7, this, that, so many models are coming up which are unbelievable, unimaginable, and these are actually becoming a larger platform to work on. So my revenue recognition criteria or my accounting criteria from those part is going to be one side. The second side, when I'm talking about the manufacturing equipment, because it's a high investment bearing industry, the fact goes very simple. What is going to happen with my plant and machinery? What is going to happen with my dies? What is going to happen with my molds? And what is impacting is the ancillary product manufacturing units are actually going to get a different kind of impact. So when I'm talking about an accounting issue only for automobile industry is going to come from a 360-degree view. Even there is an impact which is going to be there on a oil and gas, extraction companies, where the petroleum products again is going to come on a different side. That is going to go for a decline might be, and that might be used for alternative purposes. But the second side is the manufacturing of batteries and everything is going to go up. So if you see the cycle which is undergoing to go change is going to not only change the way my equipments are going to be used or my spare parts and other things which are going to be impacted. Friends, one thing which I would like to tell is this industry is going to see a major revolution, because the weight of a car is going to change, the pricing of a car, the steel price is going to change, my consumption pattern of an fuel is going to change, my electric charges which is again going to be there. Again, I need lot of power generation which is required. Today we are getting towards a stage where we are going to be a power surplus country. So now the green energy is going to play a very important role. Whether there are petrol pumps which are going to be there, or there are going to be charging stations which are going to be there, whether I'm going to have it in my home or. So the point which I am trying to tell is the accounting and the audit issues are not only restricted for the purpose of the manufacturer alone. The other industries which are working around it is also going to see a major change. So my all ancillary manufacturing units which are actually hubbed in the main manufacturing plants is again going to see a different thing. So considering this part, like companies like BMW and Mercedes is already rolled out their electric vehicles. Tata is making it big. Ashok Leyland is again coming in a very different pattern. So now the public transport is going to go change. So many things are going to come, and ultimately this change is undoubtedly going to we need to really rethink about the accounting applications which is going to come. Might be the accounting standards. Murli, Abhishek, I can tell you one thing which I was discussing the other day in the council also. I think the way we are going to look into accounts, the way my accounting standards are drafted, the way my auditing approach has been designed, and the way I'm going to form my opinions is undergoing to go a major change. I think this profession is going to go on a total different tangent, because what was a long-term asset, now I think at one stage will come where I cannot manufacture out of it anything. There are a lot of molds. Venkataraman sir might be aware, he's into it, where the embedded lease concept which is there, or contract modifications which are going to come, or might be customer related issues. About that is basically models which are sold. I have to maintain certain inventories of those spare parts and all those things is undergoing to go change. How is that is going to be evaluated, and how is that going to be impacting the financial statements is something which we need to really closely watch on, because the impact is just going to come one fine day very quick. Because today the price of oil and diesel is almost same. That was the days and these are the days. It is basically changing, and the electric cars are making a whole lot of difference. Electric vehicles, two-wheelers, in the size of population we are living in, the kind of traffic we are moving in, We don't want a high-powered bikes to ride. It's basically a small bike which is actually taking us from one destination to another destination. Metro stations, which is actually housing all these kind of cycles and bikes for traveling from one destination to other destination and keeping it back. I think, if you start looking into it, I think there is something very different, interesting, and large which is going to come. And fortunately, looking India very positive, and thanks to the leadership at large country level, Honorable Prime Minister actually talking about the Atmanirbhar Bharat, the kind of PLI schemes which are coming out, the kind of thought process which has been put in forward. We are actually going to go in a total different tangent. And today, whether you take Hyundai or you take Kia, more than 50% of the production is actually exported out of India. So this is where we are moving towards. And India is actually going to look in from a different perspective altogether. Sir, I have very limited knowledge from the automobile industry, but whatever I have is which I share. The important part is the members at large will be really interested to listen from you and look into how this different aspects of accounting are going to impact, because my debit as well as credit is going to change. My asset and my liability is undergoing to go change. Impact with regards to impairment of old plant and machinery, old dies, molds, and other things is going to have a different kind of impact. So you both are learned people from the industry specific, thoughts are going to be shared with you. DC, thank you very much for giving this opportunity to come and share my opinion. I don't want to talk more about it. It's better we listen from the experts, because we are always a learner. And fortunately, being in the council, regional, central, or at city level, all are people who are always excited to get connected with all these learned people and see what more we can learn on a daily basis. So it is like I can only just continue thanking you, and good work which has been done by SIRC. Thank you very much all. Thank you very much.
Thank you very much, Daya sir. A very lovely welcome address that you have given. So now we will move on to the session, before which I have the privilege of introducing both our speakers. I'll first introduce Shri TV Venkataraman sir, and then our first speaker, CAC Ravisankar sir. CATV, or rather TV Venkataraman sir, is a commerce graduate from Mahatma Gandhi University in Kerala, and he's a merit certificate holder and an associate member of the Institute of Cost Accountants of India. He's also a CISA, a certified information systems auditor, and a certified internal auditor under the Institute of Internal Auditors USA. He has more than 2 decades of experience spanning from manufacturing, service sectors, and across various geographies, including governance issues, risk management issues, and even compliance issues. In his current role at Ashok Leyland Limited, he leads the internal audit and the risk management function for Ashok Leyland and its group entities. Prior to joining Ashok Leyland, he was a head of management assurance at Flipkart and also had a stint with the Aditya Birla Group, Deloitte, Jindal Iron and Steel Company as well. Under his leadership, Ashok Leyland bagged the ICAI Lombard India Risk Management Award in the category of Best Risk Management Framework Systems in the automobile industry. And he also got the coveted Golden Peacock Award for Risk Management for the years 2018 and 19. During his stint with Aditya Birla Group, he received from the Group Chairman's Award for Functional Excellence from our very own CA Shri Kumar Mangalam Birla, after which he underwent an executive education program of leadership at the Kellogg School of Management in the USA. He's also someone who's very passionate about internal audit and risk management and contributes regularly to various leading professional institutions and to various advisory groups as well. In fact, he serves as a director on the board of Sycurex Systems Private Limited, which is a Hinduja Group venture, in the position of a non-executive and non-independent director capacity. Outside of work, he has interest in reading, speaking at professional body forums, photography, and nature. So thank you so much, sir, for taking time out of a very busy schedule to be here with us today and address our members. We welcome you, sir.
Thank you so much, Abhishek, and the members of the SIRC. Thank you so much. It's an honor.
Thank you, sir. Now I have the privilege of introducing our first speaker for the day, CAC Ravisankar, followed by which Venkataraman sir will speak, and you'll have a dynamic group discussion where the members from the audience also can ask questions for our speakers and take it forward. C. Ravisankar is a chartered accountant with more than 35 years of experience in finance, secretarial, and legal affairs of corporates. And he has more than 10 years experience in 100% EOU on a specific assignment for reviving and restructuring the unit. He is presently associated with Sundaram Motors, division of Sundaram Iyengar and Sons, as Executive Vice President in Finance and HR. He is proficient in financial management, project funding, MIS, budgetary controls, apart from performing secretarial functions of conducting various meetings, preparing and filing statutory documents and returns as well. He is well versed with the provisions of the Companies Act, direct taxation, indirect taxation, FEMA, RBI, accounting standards, takeover code, corporate governance, and other corporate laws as well. In fact, he is also an excellent drafter of legal documents, an excellent communicator with exceptional management skill, and he maintains cordial business relationship with all stakeholders. I must add over here, in his previous role, when he was associated with the hotel industry, he was a huge pillar of support for our ICAI as well. He's a very good friend of my father's, and when he used to organize various programs, Ravisankar sir used to allow him to get good dates, get good prices, get locations for the benefit of all of our members in our profession. So Ravisankar sir has been silently helping our profession from behind the curtains, and now we have him in front stage and center. Thank you so much, Ravisankar sir, for taking time out of your busy schedule to be here with us. The stage is to you, and we're looking forward to your first presentation, sir. Yes, I think Chairman wants to add a few words.
Yes,
Yeah,
please.
Abhishek, I would like, though I know Ravisankar ji and got connected to Venkataraman ji, I would like to thank CA Narinder Singh from Ashok Leyland and CA Pradeep from Madurai, who connected these two speakers today. Though we were knowing, but we wanted the right mix, and today hope we have an excellent combination who is going to take us through the various nuances of this automobile industry, accounting and auditing issues. Over to you, sir.
Thank you, Mr. Jain. My pleasure.
Thank you very much. Am I audible? Fine. Beloved Mr. Jain, Chairman of the SIRC, and Central Council member, Mr. Sharma, nice to see you. And Mr. Abhishek Murali, Secretary. I mean, he has given a very good introduction of both the speakers here. And it's fitting to say that, we are in Detroit of, India. Like automobile means what should come to our mind is Chennai. I mean, I'm only talking about Chennai because we have been brought up and we have been living here, and so many, manufacturing, manufacturing companies have come into play for the last so many decades. Of course, Leyland is a big player, the commercial vehicles, and TVS not far behind in terms of, producing all kinds of, automobile means TVS has to come into our mind. The reason being that excepting, constructing or rather assembling cars or, commercial vehicles, TVS has been a supplier of all what is called all components, excepting the engine, because we have been associated with this Detroit of India, and the story goes back to 1970s, I think. And I should say here, Mr. Venkataraman ji, the association with Ashok Leyland, with the TVS, I think Mr. Jain got the good connectivity between both of us. I mean, with Ashok Leyland and TVS is hands-on for last how many years? 30 plus 20, 50 years and above. And it's been wonderful, to be a part of this program and to talk to our own fraternity. And such of these programs bring into light the what is called so many insight into this industry, I would say. And as Mr. Murali said, 15 years back, I was in the hotel industry with the well-known Taj group, the Tatas. So I used to say from one cup of tea to the another cup, from tea to tea, from north, Tatas, from the south, TVS. I mean, both are big, players in the Indian industry. and I've been relishing my position here, and whatever to the extent, to the best of my knowledge and ability, I've been performing my what is called role and responsibilities. It's been a good, journey, and the sense that it is a service industry. Of course, Mr. Venkataraman ji is going to talk about in the automobile industry as from a manufacturing point of view, because Ashok Leyland is a leading manufacturer of commercial vehicles. And from my side, the automobile industries, the story will be dealership, the secondary, what is called the service point, where we are acting as a bridge between the manufacturer and the end customers. So that being the case, I think without going into much of the corporate or other talks, let me start with the small presentation. It's going to be a precise one, so that all of us understand, and every day has been a learning experience for me, and perhaps we'll take the questions later on when it comes. Can I move on to my screen? Okay.
Yes, Mr.
I
Ravisankar,
will
just
do.
one small request from my end.
Yeah,
Please address me
please.
as
Yeah.
Venkat, and no G, and
Oh.
from any one of you in the forum. Yeah. Thank you so
Fine.
much.
Fine. Okay, I'll start my screen.
You don't want to be Venkataraman, sir.
Is it visible? Screen is visible? 1 second.
It was visible, it went off again.
Now it just
Went
went
off
sir.
again. Okay, 1 second. I'll come back. Why should it not be visible? Now is it okay?
Now
Yeah,
it's visible. Yes, sir.
Visible,
Yes.
sir.
But I have to see the screen, no, to talk about that. I'm not able to see.
No,
Let
click on
me
the
see.
PPT, sir. You can
Yeah,
see. You can start a slide.
that's
the full screen mode, sir,
fine.
it will be visible.
Important. Yeah, I'm just looking into that.
Just click on the presentation
No, what
mode.
I'm saying is, okay, my screen is visible now, but I'm seeing all our faces. So I had to go
You
back
have to
and
go down
start.
to the presentation mode, the PowerPoint presentation mode right below.
Yeah, okay, I'll go to that. Now it's okay. Am I visible with the presentation?
Yes, sir. Yes, sir.
Yes, sir. Yes, sir.
Okay.
Yeah, now it's the correct one. Yes, sir. Yes.
Fine. Good. So this is a small, presentation we normally talk about in various forums. It should be of use to us when we go through these slides. See, our dealership in this organization structure is always like where the service being rendered by the dealership. There is a finance person who heads. The head who reports to the group finance, like our corporate, where we have our head office, and we have an annual business plan. We closely coordinate with the manufacturing. We represent, I should say that TVS, my division, Sundaram Motors, is representing three important car franchises. One is Honda cars. Honda cars, the last 20 years have been in India, and Sundaram Motors was the first one to establish this dealership in Chennai. And the credit goes to us to say that we are crossed 10,000 cars a year, 2 years back, and we have been associated with the Honda Cars India Limited for 22 years. And we have in almost 9 places, in IP, Telangana, Chennai, and down south. We have in 9 locations. We are dealing with this franchise. And the second one is, of course, this Mercedes-Benz. We are representing Mercedes-Benz in Karnataka, and in Tamil Nadu. We have almost 9 places. We have set up our dealership service operations, and we enjoy a very good relationship with the Mercedes-Benz, in the sense we have been clocking almost 7,000 cars. 1,000 cars a year, and over a period of time, we have crossed more than 7,500 cars. To be honest with you, for Honda, we have crossed 1 lakh cars from the day, from the inception, in the last 20 years in various places. And the third one is, of course, Volkswagen. Volkswagen, we have only one place in White's Road, Chennai, and we have clocked almost 5,000 cars in the last 6 or 7 years. So that is our dealership business. And apart from dealership, we are also operating in automobile parts distribution throughout India. And this going let's take medium, as I said, no, we are bridging the between the manufacturers, suppliers, and the end customers. So we are operating in almost 21 states, and we have in all the 3 divisions put together, that is Sundaram Motors, Metas Auto Service, and TVS, all put together. We have almost 150 branches, and we are servicing the network through 40,000 dealers. Okay, now I'll come to this. How we plan our, our activities in dealership is like the capex and revex budgets are prepared well in advance. It's all bottom up, and we do manpower planning, and we have credit policy, because in automobile parts distribution business, it is only through credit, we are able to generate the business. And we have restricted cash payments, mainly because we have to follow the statutory regulations of not crossing that 2 lakh barrier. Of course, we have to follow the other compliance issues as well. And we have cost drivers. Cost drivers, nothing but the sensitive areas where we have to keep on, monitoring on a daily, weekly, or monthly basis. And we do have centralized collections, and we do have a working capital management from the top, and we do a P&L review on a monthly basis, and which is being shared with the operating heads. And we have a scrap management process followed by monthly review of operations. And in coming to this accounting aspect of it, we are service providers. So as I said, we buy the fully built cars, and of course for Ashok Leyland, for the semi-built chassis, and then that is being retailed. So on the one hand, we have to meet the expectations of the wholesale from the manufacturers, from the OEM suppliers, and on the other hand, we are retailing to the end customers. Now, this is the chart which gives you an idea as to what are the activities of the dealership business, as it has got twin parameters. Like one is the sale of the automobile, like cars or commercial vehicles, and the second one is of course service. Am I audible? Okay. So under sales, we have a pre-sales mechanism whereby the vehicles which are being bought as wholesale has to be done PDI, the pre-delivery inspection. That is with our service network we need to do. And of course, the CRM management is pre-sales activities. And of course, after this sale of these vehicles, through the in the process of sale of these cars, you have to undergo certain other ancillary or services, like as we all aware that no car can be registered unless it is insured. So the insurance activities completely regulated through IRDA provisions, and we are the MISPs with the recent changes in the IR in the regulatory authorities, wherein we are the model MISP for the particular segment. And we need to see that after insurance, the road tax is also paid mostly through online payment. Then these vehicles will be inspected by the RTO. The inspection has been withdrawn from some of the states, because the dealership itself will be allowed to do a what is called a temporary registration and immediately deliver the vehicles. And this process, the inquiry to complete the process of delivery, it has to go through various stages, which means that the wholesale activity is on the purchase activity. We buy the cars, and when we stock the cars, and we see that we are able to deliver the cars through this mechanism of registration. And to be clear here, what happens is once the registration is completed and the delivery of the cars is completed, it doesn't mean that the relationship with the customer ends. I would say that relationship for a long-term basis, as a long-term basis, starts there, in the sense that a customer who buys the car, he becomes a service receiver from the dealership as long as he possesses the car, or as long as he owns that car. So which means the journey of a relationship with the customer starts with the purchase of a car, then ends with the his last day of holding that car. Probably you will send it, or he may come to us for another car. So there it comes the post-sales activity. It is now segregated here with the service activity, where the warranty provided by the manufacturer, we need to meet that requirement, and wherein the warranty is purely a representative act of on behalf of the manufacturer. The dealership has to carry out certain activities, and the claim for that service, whether it could be sale of parts. What I mean is this: any warranty or parts replacement, or on service through our labor sales. Mostly it is the relationship is like, warranty means the customer expects zero billing, which means that we need the dealership provides a service, and somebody has to pay for it, and the customer will not do it. Then it has to be settled with the with a pre-arranged contractual basis with the manufacturer. So that's these activities. If we don't understand, then the accounting which follows on the transactions, it will be difficult to. That's why I'm just clearly defining as to what we need to know about the sale and post sales activities. Then accounting follows on the transactions. Then comes, of course, when the whether after the warranty period, or even during the warranty period, the vehicles may come for service, where it is called service request, and the repair orders get open. And the repair orders could be of two types: a mechanical repair, or a general repair, or a value addition service repairs like cleaning activities, as well as the BNP. BNP is nothing but the body shop, where that damaged parts, either through accident or inadvertent driving, that could be replaced. So the service category is divided into normal general repairs and body shop. Here I have to bring a what is called a relationship with this. I used to say, in an hospital where the patient goes and gets an outpatient treatment, he goes and comes on the within a matter of few hours, unless he is required to be tested and is getting admitted. But an inpatient who is requiring a continuous monitoring and treatment, he stays in the hospital, and he receives through the ICU or general ward. So the cars are also like that. When the car gets meets with an accident, it has to be in the ICU ward of BNP in our dealership for a few days. Whereas general repair service, mechanical, or just on the spot cleaning or something like that, the cars will be immediately serviced and returned to the owners. So this is the whole dealership activities. So if we know the activities well, I think the accounting of this follows. Then we do all this checks. I'm just trying to say audit here, but audit here means something which goes on as an assurance. As soon as the transaction takes place, the audit also normally is being done. Apart from this, the internal audit and statutory audit comes into play. So these are the the verification which is being done in terms of SOPs. We have clearly defined standard operating process and procedures, and any deviation is being verified. And of course, all the other things are stock verification and other formalities. Okay, these two slides. Okay, these are all. I'll close this because this was. One second. I'll close this. I'll give you. Okay. Am I visible, audible?
Yes, sir. Yes,
Yes, sir. Okay. So I close that window. I'll just see one more, if I have that in my, okay. This is the other one which I would like to, okay. Is this visible now? What I've already shown you, that slide, there's uh, something else getting added here. That is banking and inventory funding. These are all, I mean, wholesale or retail funding. But here, one more slide I have to show you as to where exactly, what happens is, where exactly is the some kind of leakage, what we call it as, the deviation in terms of meeting the operating standards. So on that, we prepared a note, and then we normally, uh, discuss with our operating and accounting and auditing staff to see that, it is in various stages. We see whether the inquiry stage, whether we are, whether we are following up with the pre-sale activity properly, or these customers are being, properly handled, and then what kind of countermeasure we should take to see that it is, addressed. And then, of course, pre-sale activity includes inquiry, test drive of cars, and the pricing. I'm just giving a overall view about this, because otherwise, if you go into each of these, it takes a longer time. Then, of course, booking means, the what is called not registration here, that the customer booking, and then registration and delivery. Then how this accessories, whenever a customer buys a car, he also would like to have these accessories to be fitted. So that approach to see that these accessories are properly fitted. Then manufacturers and other dealer discounts. In this trade, it is very common that we can see, open up the pages in everywhere, they'll say this month dazzling December, or jumping January, or each quarter you will see that, or even in advertisement, there'll be a lot of freebies, or like a dealership offering discounts, or manufacturers is passing on certain benefits for buying the car, so it is luring the customers. So all this comes in accounting as to how this discount being passed on by the in the wholesale activity, and how it is being captured in retail, and there is a claim settlement with the manufacturer. So all this being covered, and then of course certain administration and post-sale activity. Of course, it is servicing of the cars and clearing the outstandings, including body and paint. So this generally, gives an idea as to how this this flow chart of the sale and service activities are being followed up in a well defined manner. So now, having covered this, what is called, one second, the activities involved in the dealership, my personal address on this occasion would be to meet up the, as I already said, that we are in the we are connecting the customers with the OEM, or we are truly a representative of the manufacturers. So that being the case, the expectations from the wholesalers, the wholesale manufacturers, and the expectations from the other side, the retail, customers, need to be met. So while doing so, our accounting has to be very transparent, and that starting from the disclosure of the prices, and also the uh, uh, the pre-sale activity, and of course about the registration activity, then delivery of the cars. So we always used to say, that when we go and buy a car, it is we are buying for a, see, in a lifetime, how many cars a customer can buy? Normally 2 or 3. So it's a pleasurable experience, like in a lifetime, the customer will be buying this kind of, upgrading his car, and so we want to see that it's a very good experience for him, and explaining all the, in and out of the car, and as well as, to give him a feeling of assurance that what he selected is a very good product. That's the way we deal with that. And the expectations of the on the other side, the manufacturing is it should be free of defects, in the sense that the brand value of the manufacturer is truly represented in the servicing of those automobiles which our customers buy. So the brand image of both the dealership and the OEMs go together here. So we have to work very closely with the manufacturers, and at the same time we have to truly represent them in the market in such a manner that all the activities are transparent, and we are able to sustain our operations for a long period to come. As I said, to start with, customer buying a car is going to be associated with the dealership for at least for the next that ownership period. It could range between 5 to 8 years maximum. So this is going to come again and again, the 5 to in a year, twice or thrice or so. He must feel that he is entering into a place where he is like a home, second home, like. So we should create that kind of atmosphere while doing our activities in a very transparent manner. Fine. Apart from this, in the dealership, the most important thing what I find is the passing on of the discounts. There is the wholesale. During wholesale, the manufacturer may pass on through the invoice, or he may choose to give it as a commercial credit note, or when the price goes up or goes down. Normally we have never seen price coming down. Price always goes up. So there is a additional what is called that invoice, supplementary invoice, which will come. So when we pass on that what is called the discounts which we receive from the manufacturer, the accounting of that has to be very clearly defined in terms of passing that discount through the retail invoice, so that we are transparent in claiming back that amount from the manufacturer. And another aspect which we have to keep in mind in accounting and audit of these transactions is an incentive. This what is called that incentives being passed on by the manufacturers to the dealership based on certain achievement of certain parameters. It could be quantitative or it could be qualitative. So that what is called is again could be based on certain achievement of quantity, means the numbers, and also it could be based on certain schemes being floated by the manufacturer at the beginning of the period. The period here normally represents a month, because normally every month the manufacturers decide on this marketing activities, and it will be specific to that models, specific to that what is called the range of the segments. So all these have to be captured at the beginning of the period, so that while doing this accounting of those incentives as well as the discounts, one has to be very clear in terms of compliance to both. Earlier it was, prior to GST, it was service tax. Now of course this is a part of GST. So we have to be very clear in accounting the same properly, so that we don't miss any part of it being a non-compliance, or at the same time we have to be very transparent with our accounting, in the sense again it is being what is called reimbursed or being passed on by the manufacturers. So these are my observations, having been in this dealership business for the last 15 years or so, and I would be very glad to take any specific questions during the later part of the session. Thank you very much.
Thank you, sir. 1 minute.
I'll close this screen.
Yes, sir. You can stop sharing the screen now.
Yeah.
I'll just give a rights to Mr. Shri TV Venkataraman.
As it is closed now. Screen is
Yes, sir. Closed, sir. Closed, sir. Closed.
okay.
Closed.
Okay, fine, fine.
Okay. Venkataraman, sir, I have given you the presenter rights, sir.
Yes, thank you. Let me just try it out 1 second. Hold on. Is the presentation
Yes.
visible?
Visible,
Yes.
sir? Yes, visible, sir.
Okay, I'm not able to see myself, but I guess that's all right. I hope everyone is able to see the presentation.
Yes, yes.
You can
Yes.
just click on that PPT. I think it will come to your screen also. Maybe that's the way I did.
No, I know it's already on the screen. I can see the
Oh,
presentation. I'm not able to
okay.
see the
Yeah.
other speakers. That's all right.
Okay. Okay. Fine.
Thank you, Mr. Ravisankar, for a very detailed insight on the dealership model, and also from an accounting point of view, what are the key focus areas, and of course from a business process standpoint as well. As you rightly touched upon, I think some of the issues that you are experiencing are pretty much similar or resonates with what even Ashok Leyland views, of course, from an OEM point of view rather than as a dealer. But the challenges can be mirrored. So I have a very small presentation. While I have tried to bring in a flavor of automotive, but I think this will be applicable to irrespective of whether it's an automotive sector or not. From a manufacturing point of view, many things could be similar for most manufacturing companies. The reason I did this was because I'm not sure of the profile of the participants. So if there are participants from other sectors as well, they may consider leveraging some of the inputs. And I would be happy to take specific questions at the end of the session. If there are questions around the auto sector or even otherwise from an audit and risk standpoint. Pardon me if this is slightly more generic. I will, of course, speak about the specific aspects of the auto sector, not specific to Ashok Leyland, though. It would be more general, which will prevail across any of the auto companies. A small disclaimer, this is a PPT which has been made by me and therefore does not reflect the views of Ashok Leyland or, for that matter, any professional body. As auditors and accountants, we typically tend to put disclaimers in whatever we say. As you all know, we live in a VUCA world, and I'm sure this term acronym is well known to all of you. For those of you who are hearing it for the first time, I think VUCA stands for volatile, uncertain, complex, and ambiguous. And there is, no other, this is probably the right time when we are dealing in the aftermath of the pandemic. The pandemic is something that was a completely uncertain event, right? So as I speak, as I run through these slides, I'm going to wear my hat of both, the head of risk management as also the head of audit, but I will intersperse some of the events that Ashok Leyland has experienced, and I'm sure most of the other auto companies have also experienced, and talk about it in terms of how have we addressed the uncertainties in such an environment, and how does really internal audit play a role in terms of managing such uncertain times. So we know that in the new normal we have we do have many of the norms to be followed in terms of social distancing. There are people working from home. I'm for as I am speaking to you today, I continue to work from home for the last ever since the pandemic was formally announced in the country. And but this is one of those functions where we have been able to cope up thanks to technology, where we have been able to work seamlessly in the confines of our residence, in terms of access to the applications, access to the people through the the collaboration platforms such as Teams, and also ensuring that skills are augmented. But as we also know that in this pandemic, we have faced a tremendous amount of security related challenges, which is cyber related challenges because of the work from home model. And I'm sure most companies have addressed cyber risks as it evolved from a business continuity standpoint. So in terms of impact of COVID-19, I'm sure you understand that companies have taken a lot of measures in terms of focusing on employee and workforce health and safety. Ashok Leyland was no exception. We formed an emergency response team. The risk management function was also represented as part of the emergency response team. Yours truly, along with a colleague of mine, we were part of the emergency response team jointly with human resources, IT, and the administration function and the communications function. I think primarily this was seen as a major risk, and business continuity and sustainability was of paramount importance. It continues to be. So from an organization's own resilience management and business continuity management, how are we prepared for crisis? And I'm sure most companies have very robust BCP plans today in place. Cybersecurity threats I spoke about in the previous slide. When you have attacks by the second, multiple attacks across networks, and I'm sure today most companies are having, in one way or the other, its presence across the cyber landscape. And in such an event, of course, when you are connected, you are exposed to cyber threats. And it would be foolish to assume that the company is well protected from a cybersecurity standpoint. And of course, every company has to evaluate its own state of preparedness in terms of addressing or managing cyber-related threats. Fraud risks, well, it is a subject which is normally spoken by most auditors. How do you deal with fraud risk, specifically when you have a situation where people are always vested with multiple responsibilities? I mean, there is a fair amount of attrition, or more and more processes tend to get compromised when you have multiple responsibilities vested with a single individual. So collusion is fairly, it's something which is endemic to a fairly skeletal organization. So how do you manage fraud risk in the new normal, and specifically in the aftermath of COVID, when there has been a spate of, there could have been a spate of processes that have been either tweaked to meet the new normal, or the workforce has been reduced because, as you know, certain companies did trim down its fat in the system. Possibly it could have, compromised some of the processes that were established earlier. So how do you look at fraud risks in such a situation? Of course, needless to mention, financial management in terms of working capital, overheads. Most companies are working multiple, looking at all nuts and bolts across the system to evaluate where is the fat that can be eliminated, and how do you manage your spends, how do you prioritize your spends, and ensure that the financial discipline in the organization is sacrosanct. A few other risks in terms of supply chain. As you know, business it's not a cocooned model for every business. I mean, it is completely dependent on external actors. I mean, you support systems such as your supply chain, your third parties. And when you have third parties and the vendors who provide you the raw material or the components which are required for manufacturing, how do you evaluate your supply chain risks? I mean, I'll give you an example here. As you know, and Mr. Ravisankar mentioned that Chennai is the Detroit of India. Well said, actually. But a lot of the support in terms of the components or the products that go into the manufacture of a vehicle comes from various parts of the country. Some of it is concentrated in north, say Gurgaon, for example, or Noida, for example. Some of it is concentrated in the west, largely Maharashtra, the Pune, Nasik belt, Aurangabad, as I recall, and of course Chennai, and a few other parts across the country. But largely the concentration is there in the west and the north. If that is the case, how do you ensure that if the pandemic is also concentrated, and as you know, Pune was under lockdown for a fair amount of time, how do we as a company manage the supply chain? And this is not to talk about even imports. So if we have a situation where we are importing from a specific geography, and with extended lockdown which is happening in Europe and other parts of the globe, how are we ensuring that we have de-risked ourselves from such supply chain risks? So COVID-19, I don't think we can wish away the pandemic anytime in the near future, although vaccine is around the corner. But one has to really wait for the vaccination process to be completed and the country to come back to near normal. Until only then we can say that we are back to pre-COVID days, and I don't think it will happen in the near future. So we spoke about supply chain risks, and I think there are few other areas as well in terms of risks, and we talk about IT infrastructure, business and IT continuity, talent separation and reduction workforce. I think today attrition is fairly normal. I mean, if you are looking at the situation where employees are working from home, there is no guarantee that tomorrow they may want to return to their base location, right? And if the company does enforce a process where, does enforce a policy where, they are not willing to be flexible once situation is back to normal and they call the employees back, it may not necessarily be, what was the prior state. So you could have a reduction in workforce, you could have talent separation from that point of view. You may not necessarily get skills the way you used to have skills earlier. People may prefer to opt for a contract-based working model where you just work for the organization. In fact, that is a new order of the day. And since Mr. Ravisankar is also an HR professional, I was quite intrigued by his profile. I'm sure he will resonate with the statement that in a gig economy you will have a workforce which is extremely mobile and which will be driven by the compulsions of contract-based workforce model. And in such a situation, how do we manage the overall talent for the organization, right? And of course, then there are risks can be mitigated through various ways. Insurance is one of them. So when we talk about transformation, and I'm jumping gears a bit, the reason I do this is I will talk about audit. Audit is a subject which can, I'm sure many people understand that better, but we will talk about audit and the focus of audit in the subsequent slides. But today, if I set the context for manufacturing sector and more so the auto sector, as Ravisankar already touched upon, it is a sector which has been, and also Mr. Dayanivas Sharma touched upon this in his opening address. It is a sector that has been the most impacted even prior to the pandemic. If you recall, the financial year 1920 witnessed a downturn in the economy, and the industry was already, in terms of the downturn, it was already facing the headwinds. And when you have headwinds, the typical process for most companies to go through is cut down your spends and so on and so forth. But thanks to COVID, digital transformation was something that took off in a very fast pace. And as you can see in the slide, if the question is posed in terms of who led the digital transformation of your company, the answer in all probability would be COVID-19. So what do we mean by digital transformation? So you do revisit all your processes, understand where exactly the company is headed towards, look at all the areas where automation can be brought in a manufacturing industry. The advent of Industry 4.0 and the Internet of Things have really shaped the way in which manufacturing industry is also undergoing a transformational shift. Digital transformation could be also in the areas of newer technologies such as 3D printing or robotic process automation and so on and so forth. Now, you as an organization, one will have to evaluate where are the areas where we can leverage the power of technology and make sure that we can bring in efficiencies in the system. As we also look at digital, there will be associated risks associated with the transformation, but we will come to that in the subsequent slide. And so primarily when we talk about Industry 4.0 and Internet of Things, there is a spate of security threats that one will have to look at, specifically both from a cyber point of view and even from data privacy and information security point of view. If we talk about social media, I mean, more and more companies are on Twitter or on LinkedIn or on Facebook and so on and so forth. How are we ensuring that the brand and reputation risks are managed? When we talk about the cloud, again, how are we ensuring that the data which is on-prem vis-a-vis data which is on cloud, how are we ensuring that there is appropriate security with respect to the storage and processing of data? How have you managed the contracts with the cloud service providers and so on and so forth? Again, from a digital transformation across the company, I think it will be closely intertwined with the strategy, and therefore, how are we looking at strategic risk across the organization? And last but not the least, the third-party risks, which, as I mentioned, could be on account of the contracts that you have with the cloud service providers. So these are some of the risks, and again, the list could continue. Now let me switch tracks back to the internal audit profession. So the internal audit profession has been around for quite some time, more than about 75 years, and it all began with the World War II. But have we kept pace as an internal auditor or as an internal audit professional? Have we kept pace with the? Just one second, I see a lot of. Sorry. Have we kept pace with the change? Right. So internal auditors cannot live in the past glory in terms of the way it had been managing audits even about 10 years ago. And I'm sure most companies have adopted newer and newer methodologies for looking at risks and how does internal audit function stay relevant. So the question I have to ask to the audience, and maybe I will take the responses at the end of the session, is has an internal auditor prepared himself for the current battle? And when I talk about the current battle, I'm not referring to the 5 years back, what has been changed, or even 2 years back. I'm referring to on account of COVID-19. I'm sure most companies have undergone significant transformation or is undergoing, but are internal auditors caught off guard, right? So do the internal auditors know what is the strategy of the organization? Do the internal auditors know what are the changes to the business landscape? Are the internal auditors really partnering with the business to provide them support? So some of the questions which I've had, and I'm sure you will appreciate the fact that if internal auditors are not ready for the current battle, they will soon have to ship out if they are not able to shape up. So looking at the definition of internal audit, and I will reproduce this definition from the Institute of Internal Auditors, which is the Global Institute of Internal Auditors. Internal auditing is an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. And how does it enable that? It helps an organization accomplish its objectives by bringing in a systematic and disciplined approach to evaluate, improve the effectiveness of risk management, control, and governance processes. So I think there is a fair amount of key words there, which I'm sure resonates with most of the professional practitioners in the domain of internal audit. Now, we are, of course, it is well known that we are an independent function and we have to provide assurance and so on and so forth. There is always an argument in favor of how much of assurance is that the primary activity, how much of consulting is do we do, or do we ensure that we are independent in the true sense of the term? But the bottom line is, how are you adding value to the organization, right? And are you covering the three domains of risk management, internal controls, and governance, right? So let me just share a few examples, based on my experience here. So when I began the journey of internal audit about 2 decades back, or probably slightly more than that, I think it was mostly driven by reviewing transactions, reviewing compliance with operational processes. And I think that's fundamental to the role of an internal auditor, right? Just to evaluate compliance. But today's internal auditor has to wear multiple hats. One is, of course, compliance is bread and butter, assurance is bread and butter. One cannot wish away that. But today the expectation is that internal auditor, while evaluating compliance, it is like brushing your teeth. I mean, you will have to necessarily do that, but will also wear multiple hats in terms of being a business partner. Now, what does a business partner mean? So the audit function will have to be truly able to understand what are the strategic imperatives of the organization. We have to be truly able to understand what is risk in the first place. I mean, risk is loosely defined as the likelihood of something going wrong, right? And its associated consequence. Now, from a risk management point of view, what is an internal auditor's role? So the audit function will also have to evaluate whether the organization has really carved out, a structured process of identifying risks which can impact the enterprise. And are the risk mitigation actions adequate to mitigate the risk, and is it being followed upon for closure? Similarly, from a governance point of view, the internal audit function will have to play a role in terms of evaluating the culture and the ethical climate of the organization. Right now, how does one do that? So the ability of an internal auditor to wear multiple hats and making sure that the audit function is truly able to add value to the organization. And as I speak today, the audit function in Ashok Leyland is also involved in enabling the organization go on the roadmap of ESG, and I'm sure this is the term that you will hear more and more in the days to come. ESG, for those of you who have not heard it, is environmental, social, and governance. So, but anyway, so notwithstanding that, I think the point I want to highlight is you will have multiple hats to wear, but still call a spade, and that is where you don't compromise your independence and objectivity. So in terms of adding value, what does it mean? The definition, we spoke about the definition in the previous slide. We are able to add value only when we provide assurance, relevant assurance. You do not provide assurance on some things which are immaterial or which are probably no longer relevant in the organization scheme of things. For example, if you are on a digital transformation journey where you have implemented a new process which leverages technology, and if you still end up reviewing the outdated processes, I don't think that is being fair to the organization or to the function itself, right? Similarly, from a materiality point of view, if your overhead spend on, say, travel is only less than 1%, I'm just giving an example. In the aftermath of COVID, travel may not be significant for most organizations. But if you continue to look at travel expenditure as one of the key domains for coverage in your audit plan, I think that may not be relevant to the organization because the time is not properly or appropriately utilized. So when we look at how do we contribute to the effectiveness and efficiency of governance, risk management, and control processes, the audit function will have to take a holistic view in terms of what are the key strategic imperatives for the function, for the organization, what are the key risk drivers, and what are the key risks that the organization faces, and what are the risk mitigation action plans, and then take a view in terms of what the relevance of the risk and evaluate it and provide assurance in a timely way. I mean, it is not relevant if the assurance on a particular subject is not provided within the time in which it has to be covered. Another example in this space would be that if the organization is embarking on an ERP rollout, and the internal auditor comes into the picture only after 1 year after the ERP rollout has happened, I don't think it will be relevant. I mean, this is just a small example. Today, I'm sure most companies engage internal auditors because they don't want to have internal controls failing when an ERP solution is being implemented or you're migrating from certain legacy applications to a newer solution. So the primary role of audit should be to help the board and the executive management to protect the assets, reputation, and sustainability of the organization. And how do we do that? By providing risk-based and objective assurance, advice, and insight. It's a theoretical slide. I don't think I want to spend time. But from the professional practice of internal auditing, I would say that the internal audit function will have to demonstrate. There are 10 principles, core principles for the professional practice of internal auditing. This is published by the ICAI. And I would recommend that if people are interested, they can also look at the ICAI website to understand the core principles. The 10 principles are demonstrating integrity. I think integrity is sacrosanct and it cannot be, there is zero tolerance for any compromise of integrity, even within the professional realm of internal audit. Competence and due professional care. I think as expectations from various stakeholders go up, the internal auditors also will have to demonstrate competence and professional care in the work that is being performed. Let me give you a small example here. I mean, earlier we used to do sample-based reviews based on the risk and materiality, of course, but today the expectation is that there will be 100% data analytics performed on a given domain so that the audit risk per se is minimized. The audit function should be objective and free from undue influence. There are certain organizations where the audit function reports to legal or the company secretarial function. While it might have been relevant at a particular point in time, I think the organization should also evaluate whether the audit function's ability to provide objective assurance is impaired as a result of such reporting structure. Ideally, the audit function should report into the board, and I'm sure most companies which are having robust corporate governance practices will ensure that the head of internal audit function has a functional reporting to the chairman of the audit committee of the board, and also an administrative reporting to the CEO and managing director of the company. The function should also perform its duties with, in terms of providing assurance which aligns with the strategies and objectives and risks of the organization. I will talk about it in the subsequent slides. The positioning and resourcing of the function, I thought, the positioning is in terms of the organization structure of the function, but in terms of resourcing, I would say that today talent in itself it's a scarce commodity, and there are companies which have moved away from a completely in-house model to a co-source model or partly outsourced model. There are pros and cons of each of these, but ideally resourcing is something that the chief audit executive will have to evaluate in a very practical manner and take support from external service providers as appropriate. This is my personal view, because not all resources or not all competencies, both technical, largely technical, will be available in-house. From a point of view of continuous improvement, I think the internal audit will have to demonstrate its quality and continuously add value, and that has to be, there need to be structured metrics in terms of evaluation of the audit function, and these metrics will have to be aligned with the audit committee of the board, and the outcome of performance of the audit function will have to be shared vis-a-vis the metrics, if not quarterly, at least once a year with the audit committee of the board and also the CEO. Communication has to be of paramount importance, whether it's oral and written communication. I think it is, these days one cannot afford to think in your mother tongue and communicate in a very unstructured way, because English has typically been seen as a medium for communication. But as we move into agile internal auditing, the days of long written reports are gone. I think communication has to be short, crisp, and to the point. So effective communication, no doubt, is one of the key tenets for a successful internal audit function. Of course, the last three items are, bullet points are in relation to what we do as a, activity, which is providing risk-based assurance, and at the end of the day, has to add to the organizational, improve the organization's processes. So, when I talk about bullet point number 9, which is in terms of function being insightful and future focused, internal audit can be relevant only if it is able to provide insights and not post-mortem based audits. I think the ability to translate based on the reviews that assurance reviews that are being done in terms of what does it hold for the organization, and therefore what has to be course corrected. When you do an audit report, you would typically have 5 C's which come in the audit report. The first C being the criteria, the second C being the condition, the third C being the consequence, the fourth C being the corrective action. Sorry, I must correct myself. So the criteria, the condition is what has gone wrong, the consequence being what is the impact, and what is the cause? So, what led to the gap? So that also has to be analyzed by the audit function. Maybe you will need the support of the business. And then the fifth C being the corrective action, which management will have to provide in terms of, the course correction that they will do. So I think when we draw analogies from all the work that we do, even within a given domain, suppose you're taking the procure to pay domain for review, based on the gaps that one identifies through the work that is done, one will have to draw either the team leader or the vertical head or the chief audit executive will have to draw insights, because the team member, it may be a bit difficult to ask the team member to draw the insights. The chief audit executive will have to leverage his experience or her experience, and based on the industry, and then provide practical and insights for the business to take cognizance of. So by and large, if one example I can think of is, if by and large a lot of manual processes are there within the given domain, and you find that it can be automated to a large extent, and there are solutions available in the market, I think the internal auditor will have to call that out and suggest not necessarily the solution per se, but suggest that through the implementation of an appropriate solution, what all efficiencies can be brought in. So that will become future focused, and that sets the tone for the corrective action and the governance mechanisms to improve. Now I will specifically talk about the auto sector and the manufacturing industry. I will use both terms in common parlance. Predominantly, I think whatever holds good for the manufacturing industry holds good for the auto sector as well. Of course, there may be a few nuances which I think Mr. Ravisankar has also touched upon in terms of warranty claims and so on and so forth. But I'll talk about the larger picture, and then we'll come to the specifics. So when we talk about the auditable risk landscape, and typically the audit function, when it draws its internal audit plan, we will have to set out the charter in terms of what is the auditable risk landscape for the industry that we are operating in. And if you're talking about the manufacturing industry, I'm sure we will have we will talk about the plant operations or the manufacturing operations, and some of the domains which will get covered within the audit space within that is your environment, health and safety, your production planning and control processes, your typically the value engineering or the value stream mapping processes, which is how do we re-engineer some of the aspects relating to manufacturing to bring in more value or efficiencies to the shop floor. And there could be a focus on energy and so on and so forth. Within the supply chain, I think we spoke about sourcing, quality, inventory holding norms, and vendor management. I think quality and reliability is one of the key focus areas for most auto sectors today, and I'm sure with the aftermath of COVID, even sourcing and supply chain risks continue to be of great focus. And therefore, from a vendor concentration risk point of view, I think when the internal audit looks at sourcing processes, what they will typically focus upon is what are the key performance indicators or the key result areas for the sourcing function. And typically, this could mean that you order the right quantity of the right quality at the right time and at the right price. And I think it's no secret, that's a well-known fact. But the other thing that one will have to look at is, are the vendors supplying on time in full? Right, so which is OTIF. And I think again, when you look at quality today, the quality, where are the quality gates for the organization as you source your material? How are you ensuring that the vendor quality norms are adhered to, and so on and so forth? Right, so what are the quality gates and the norms that have been set by the organization? From an information technology point of view, I think we spoke about cybersecurity, but in today's age, I think every auditor, whether you are an accountant or an engineer, will have to have a deep domain understanding of information technology. I don't think you can wish away the fact that if you're an accountant, you will only look at processes and specifically commercial processes. You will also need to know about the technology or the information technology platforms on which the processes operate. And therefore, if I look at general controls, you may look at access rights management. If I look at application controls, as an example, I would look at whether my three-way match in the between the purchase order, goods receipt note, and my invoice, whether the three-way match configuration controls have been enabled. So some examples, and from a cybersecurity point of view, I would look at what are my threats in the landscape. Do I have a security operations center which monitors all the threats, and how are these threats getting mitigated, and so on and so forth. So I think there could be certain specialists which look at cybersecurity related elements, but as far as general controls and application controls are concerned, I think today's accountants or the process auditors will also need to take a lead in terms of understanding and evaluating the same. From a human resources point of view, I think as you know, the new code of wages bill has been promulgated, and I think while it is yet to become an act, I think we also need to understand the changes to the regulations in the space. There are a lot of labor reforms that are happening in the country at this point in time, and the internal auditors will have to evaluate once the compliance becomes a reality, adherence to the compliance. Then of course we look at compensation and benefits, payroll management, talent acquisition process, that is a hire to retire, and so on and so forth. From a CRM point of view, order to cash, receivables, pricing policy, warranty management, warranty claims management, the annual maintenance contracts for customers, the overall incentives, how are we managing the incentives which the dealer passes on to the OEM. I think most of these are pretty much standard for most of the auto sectors. And finance and accounts, I think again Mr. Ravisankar has already touched upon it. Treasury management and operating working capital management continues to be a key focus areas for internal auditors, as also costing. So material costing, how do you know that you have the right bill of materials, and your if you are using an ERP, whether the back flushing has happened at the right time, making sure that your products are costed in the right manner, and there is no there are no line items which are missing from the overall costing of the product. From a financial reporting point of view, one will have to look at, of course, the appropriateness of your books, financial statement closing process. And given that today most internal audit functions across many companies also support an internal controls over financial reporting, we also in Ashok Leyland support the management in terms of doing the testing on behalf of the management to make sure that IFC controls are properly baked in. We spoke about compliance with regulations, information security. I have spoken about business continuity and disaster recovery. I think these are some of the auditable risks which can be covered. There could be much more, but in the interest of time, I've thought it will be good to focus on some of the key elements. But the primary thing to note here is that while you may have an auditable risk landscape, the audit plan has to flow from what are the key imperatives for the organization or the key focus areas, and of course draw your plan in such a way that you don't compromise on compliance, but you also are making sure that the management sees you as a truly relevant to the organization, right? So we may not be able to look at some of the uncontrollable risks, such as competition risks and so on and so forth, but I think it is important to understand that whatever falls within the ambit of controllable risks, I think the internal audit function will have to scale itself up. So some of the key risks that typically gets which should be factored in drawing up the internal audit plan, I think largely we've spoken about it. I would say that potential for revenue leakage, or if there's a potential for bringing in more efficiencies, I think that needs to be all such areas will have to be evaluated. Idle assets and suboptimal resource utilization, weak oversight mechanisms, which is where monitoring controls could potentially fail. Typically, in an environment where you are dependent on certain, the monitoring mechanisms to work, you could have a situation where the monitoring controls don't operate effectively, or there could be a potential compromise from a segregation of duty point of view. And I think this is where it was important to ensure that all manual controls are thoroughly evaluated, and wherever manual controls can be eliminated by bringing in automation, that is something that the internal auditor should also be cognizant about. Risk of fraud and management override of controls. Typically in procurement function, you would see that there is a lot of potential unethical acts. So one of the key recommendations that I would normally give to companies, I mean, if you're doing a procurement to pay review, or if you're doing a culture review of the organization, and if you have an ethics incident with respect to sourcing practices, one will have to evaluate what has been the tenure of the people working within the sourcing function. I mean, is it something that can be rotated? Can you ensure that after every 24 or 36 months, the people responsible for buying rotate into a function where the collusion with vendors is or a nexus with vendors can be eliminated? May not be fully eradicated, but at least you reduce the risk of such collusion, right? And therefore, one of the other things that also one will have to look at is the maturity of the overall control environment. This is actually the tone of the top. Do we have the right policies and procedures? Do we have adequate management oversight of the controls? And the code of conduct, the information security policy, the whistleblower policy, and so overall maturity of the control environment. What is the messaging that you get to hear from the senior leadership? I think that will also have to be evaluated by the internal audit function. And there are guidance available in terms of how to evaluate the maturity of the control environment as well. So moving forward, I think the future of internal auditing, and I have about 5 minutes before I think the Q&A session starts, so I'll kind of wrap up in the next 1 or 2 minutes. I think the future of internal auditing has already arrived. I mean, you would have heard, many people talking about robotic process automation and advanced data analytics and so on and so forth. The days of providing only transactional based assurance is gone. I think today more and more companies, as they embrace technology, internal auditors will have to also embrace technology, and that technology adoption has to start not only at the organization level but also within the function level. And I'm sure internal auditors will have to be adept in using technology to perform extensive data analytics. Recently I came across a company where they were implementing bots. So the question I had was, how do you ensure that the bots are adequately tested? Because if the bot is going to do the transaction for you, thereby reducing your manpower, how are you going to ensure that the bot, the algorithms are appropriately configured? And so these kind of the internal auditor may not be a specialist in technology as such, but he or she should be able to ask the right questions. So there was a concept that I recently heard in one of the webinars in terms of agile audit approach. So the days have gone where you actually have a very large plan, and you take about 1 month to do a review and come out with a report and then discuss it with management. But the agile audit approach talks about being nimble-footed in terms of your planning, execution, and in parallel discussing with the management, aligning your audit timelines accordingly, and making sure that the reports also are made in a much more leaner and meaner way, so as to prevent surprises. You don't really wait for the audit report to be issued. I think audit reports will only have to communicate what have been the results of the audit, but this is a sort of an offshoot from technology companies where they have this Scrum method, and I mean these are jargons, and I don't want to be talking about it, but essence to say that agile audit approach typically cuts down the fat in the way internal audit is performed. And I think the audit function will have to elevate itself in terms of understanding how do we embrace such kind of frameworks within the internal audit program. So the last slide I have is, how do we stay relevant? I think it's suffice to say that we must be invited to participate in critical business meetings. Now, how do you do that? So it's a chicken and egg story. You don't get to participate in critical business meetings if you are not adding value. But to add value, you should also know what's happening in the business. So I think as you are seen or more visible in the organization through the work that you do, you also get invited to business meetings. And in the meetings, I encourage whoever is participating to ask right question, even if it is, it may be a trivial question, but it should be relevant to the subject, of course. But you should ask. There's no point holding back the questions and not being able to, communicate what you have in your mind. So offer risk insights. So I had mentioned in my previous slide on the reporting front, I think the internal auditors should bring in insights in the work that they do. And this, they have to ask relevant probing questions. There must be a critical bent of mind for the internal auditor. What is changing in the business? Be seen, be heard, and understand what's happening in the business. And ultimately, keep reading, because unless you are aware of the changes in the external business environment and how does it impact the industry, you may not be able to offer relevant insights. And ultimately, last but not the least, offer your function services where you can add value to be seen as a proactive business partner. I think one need not oversell here. I think you typically get invited to review processes or even contribute to the processes. For example, we have recently participated in some of the various changes to the processes, or even bringing out new processes for the company, because the internal auditors understood the controls and the risks for that process. So I think wherever it is, the business has seen that you are able to create the right perception and are seen to be adding value, you get invited to contribute in a proactive manner. So my parting message is, as internal auditors, we have to stay hungry and stay foolish, which is we have to stay relevant and constantly be, challenging ourselves to be ahead of the game. So with that, I conclude my thoughts, and of course, if I'm happy to take questions jointly with Mr. Ravisankar. Thank you.
Sure, sir. Thank you, sir. I'll just share my screen with the questions. Okay. I hope the Excel sheet is visible. Are you able to see the questions, sir?
Yeah,
1 minute.
we can.
Okay. You can go one by one, sir. Do you want me to read the questions or else? What do you
Not
want?
necessarily, I think. Mr. Venkat,
Okay.
we can read this, right? Yeah.
Yeah, I can read.
So either one.
So how do we start? First question to be answered. It's a very interesting question because can I go ahead, Mr. Venkat?
Yeah, please do. In fact,
Okay, you can add whichever. So COVID impact is on positive side or negative side. See, business is full of ups and downs, and this downward trend has continued for over a period of time, right? No, 1 year. And during this period, there have been certain segments which did extremely well, in the sense that the healthcare, this food industry, where the pickup and drop, like what we have Zomato, Swiggy, and all that we have seen, and also the big basket. See, the healthcare and food industry will never see any downward trend, because it is life like our bread and butter, and without that we can't survive. But the whole world has seen, no, without aeroplanes, without cars, without luxury, without clothes, also we can live. But can we live without food? Can we be happy without? Can we be happy with disease? The disease means that for COVID we have been afraid of not even moving out of the house. So the healthcare and food industry, of course, gained a lot, and other industries started following. Like there was a lull in that. Because both of us are from automobile industry, we have seen, witnessed, and we started saying, I think Mr. Sharma started saying, our central council member, that pre-owned cars, what kind of, the pent up demand, and also it went up, the demand went up, and we were also aware that people started moving very safely and securely, so they never wanted to be in a public transport, and they started buying cars. That's the way it is. So The overall, I would say that it's a question of time. I would say it's a matter of time that in another 6 months with the vaccination, and already we are witnessing in India that we all everywhere, even yesterday, Ranganath Street was full of activity. So people are moving, people have started moving. So I think we'll be back to normal. Near normal is one thing, but we should know that this industry, the segment, whatever, we had a lull period. I think it will come back again. Matter of time. Let's wait and see. Share the presentation. I think it's subject to, if it is more interesting, I think why not? It's only a generic presentation we have made. Nothing insight into our industry. I think, Mr. Venkat, you can
No, I
offer
agree.
your views.
No, whatever I have shared is also pretty generic because at the end of the day,
Yeah.
it would not be fair to share what is specific to a company.
Yeah, correct. And it's going to be helpful to our fraternity. Why not? No problem. Yes. 3, competitive pricing during festival time as well year-end models. What will be the effective stand on assurance for business growth? Demand and supply has always been the in the factor. Yeah, please proceed. Now we are into BS6, so you know better what's going on in the industry. Please, sir.
No. I was saying that the pricing is always a function of demand and supply. Of course, at the end of the day, we have to sell what we produce. So business growth will be completely dependent on two things. One is how the overall economy picks up. And, at the end of the day, if the GDP picks up, the business also grows. As you know, the commercial vehicle sector is a barometer of the economy. So I guess, in terms of an audit point of view, I really don't think there is anything that we can do in terms of assurance for business growth. I think those are the metrics which the business is going to be evaluated in terms of whether it is gaining market share, whether it's going to gain top line growth or bottom line growth, etc. So competitive pricing is again subject to the vagaries of the economy itself. In terms of what competition offers, what we offer, how can we uniquely position ourselves vis-a-vis the competition. So every company will have its own strategy on that, actually.
Yes. So valuation of spare parts in automobile trading. As far as I could see, the parts, the most of the spare parts are, it's like a secondary market where OEM does the servicing through the, that OES, OEM is what is being fitted into the original vehicle, and the secondary market for OEM is the servicing mode. Apart from that, the pricing is determined by the mostly by the what is called the inputs which goes into that manufacture, and of course it's as I've seen we are also in the automobile parts distribution business, so we have seen that OEM supplies, I mean the parts supplies to the OEM has always been very competitive because the final product has to be very price wise is competitive in the segment. Otherwise, in the secondary market, the prices depend upon, I would say, the both demand and supply has always been. And secondly, the quality parameters, which are very much essential. Otherwise, the quality suffers. We are at risk of automobile means. I always say it's like a doctor. Is always 5 people are traveling in a car. You can't afford to have a spurious commodity there, like a brake linings or the tires not functioning properly. We are at risk. So the quality is very important. For that, we have to pay the price. And as I have seen personally from the GST point of view, from the GST introduced, the price have not gone up at all. It's been stabilized for a period of time now. Please, Mr. Venkat, you can add anything on this?
No, I think you touched upon all the bases.
Yeah.
So I think we can move to the next question.
Yeah. I think the question is for you.
Yeah, it's for me, I guess, and that too from a friend of mine, Satish. I hope it's not a planted question, I'm sure. Okay, so what is the involvement of internal auditors on the future strategy as the auto industry is on the cusp of a revolution? So I'm sure you're referring to future strategy of the organization and not the strategy of the function. But let me tell you, because I wear the twin hat of the risk management function head and also the internal audit function. So I think I am able to transcend both the both the business understanding as also from a risk point of view. So when we engage on the risk front, and I have a separate team as well, we look at where are the key risk factors impacting the organization. I mean, it could be from, if I take auto industry today, some of the key risks could be concentration of the suppliers, as I mentioned at the beginning. So when we have our annual corporate planning exercise, we may ask questions specifically with respect to the sourcing strategy in terms of, what is their de-risking strategy for concentration risk. I mean, just as an example. Similarly, from a geopolitical risk point of view, how are we ensuring that, we are entering multiple markets, or let's take again geopolitical risk with the China border issue. How are we ensuring that the dependency on China as a nation to supply parts to us or components to us is reduced, right? Even when you look at it from an extended ecosystem point of view, some of the parts could be imported by our tier 2, tier 3 suppliers, and we are buying from the tier 2 and tier 3 suppliers. So how do we ensure that the tier 2, tier 3 suppliers are able to sustain their supply to us? So these kind of questions, and I think this engagement has to happen across the business after once you have an understanding. Now when you engage with the business, you're also planting these you're influencing the business in some way to think in that direction. So I would only go to such an extent to say the internal auditors may not play a direct role in shaping up the strategy, but through its influencing mechanisms, ask the right questions and then elicit the right response mechanisms to the organization strategy. And that's really what it is all about.
Good, sir. The next question 6 is how will you value the demo cost kept for test drive when it is kept ready for sale? So each of the OEMs have their own, way of determining the use of demo costs. Like, some OEMs say you have to use it for 6 months time period. Some say that it should be run for, it cannot be run beyond certain kilometers. Could be 5,000, 15,000. So depends on the period. But as we all know that once we register a new car, definitely the buyer, it's like pre-owned car, and the second sale, automatically the prices come down. Nobody would like to pay the same price, so irrespective of that the class or the manner in which the car has been maintained. So normally it goes down by at least 20%. Demo cost goes with the reduction. I'm giving it range, 20-25% will be the reduction in the value between the new car and the demo car. Yeah, next. New model. Pandemic proof.
I will take a stab at it, and then maybe you could add on to it, sir.
Yeah,
So no, in terms of the pandemic, I think there was a slide which I had put up to say that the COVID-19 has accelerated the digital transformation of the company. Now, it is true for most organizations. And so does the company business need a new model? I mean, let's take TCS as an example. We'll not talk about auto, or we'll not talk about manufacturing. TCS has said that by 2025, it will have only 25% of its workforce operating in premises, on premises. So in terms of its own real estate, they want to reduce its the investment or their overall exposure in real estate. Now in terms of working model, I'm sure many companies have also adopted to flexible work from home today, where your employees who have comorbidities or who are able to who need to provide care to the elderly are able to work from home. And I'm sure for functions which are not necessarily in the manufacturing space, which are not necessarily required to be on the shop floor, which are back office support. Let's take the internal audit function, for example. We have been able to discharge our function responsibilities in a fairly structured way of course with some delays here and there, but otherwise the assurance has been fairly seamless in terms of the work from the work from home. So that from a business model point of view, I think digitalization and moving away from traditional businesses to more solution centric businesses, becoming more agile, and of course it will also have to align with the strategy. So where is the strategy for the organization headed towards? I mean, if I go back in time, prior to the pandemic, Uber and Ola was actually impacting the passenger car segment in terms of new offtake of new cars. But with the pandemic, people are afraid to hire an Uber or an Ola, and they would prefer to use their own passenger car or a two-wheeler, and therefore the models cannot necessarily shift base immediately. One will have to evaluate the long-term implications, and then accordingly the business model will have to evolve. But suffice to say that digital transformation is the order of the day, because you are bringing in more efficiencies into the system.
Yeah, I would like to add on this back office, as Mr. Venkataraman said rightly, yes. I mean, all back office functions started working beautifully with the work from home model, with the automation in the banking, where that we are able to transfer funds, and also payment is being received through these various mechanisms. But I think from the front end, in the front end where that customer focused attention areas. So what we did, we devised a service where our people, service technicians, were able to go to the customer's house with all full precautions, with the PPE and all that. They were able to attend the calls, and digitization has been paving the way for the new car sales. We have got our. It's not that the footfall at the websites, and also the through the other modes of communication like WhatsApp and other digital media, social media, and also has flared up. And then now that what we have also seen that the decision makers, like a customer wants to buy a new car, he makes all his what is called analysis, and also he doesn't come to the showroom, of course, obviously for COVID reasons. So what he does, he makes the digital attempt to select the car, because he is already well informed about the car which he is going to buy, or that whatever decision he makes, he just implements it. And we were very glad to even go and hand over the cars at the doorstep. The delivery has been taken. So also the pickup and drop has become new normal in terms of servicing the cars. And we have kept our workspace in the the dealership, where the service, all that, with the all kinds of safety precautions have been taken, and it's been widely advertised, or rather widely informed to the customers as to what kind of precautions having been taken. And I think we had a rule, as in the earlier occasions, when we said we never allowed our employees to come in a two-wheeler without a helmet. No, without a helmet, if a security man sees a person coming in, he will stop and he will be sent home. So that was the security measure pre-COVID. Now you can imagine the security for safety measures we have to take. So we have the sanitizer, we put the mask free of cost. We do all that, and also we were determined to see that all the employees have been taken care of. These employees are going to serve the customers, so both of them are like two eyes of the organization. So we took all the care. So it has become a new normal now. So to be honest, I'm sitting alone in my office attending to this. So it's, okay, yeah, go ahead, please. Next. Approved SOP. I think SOP is like what we would like to deliver. It's in the form of what is in the form of an assurance. It's like SOP is a standard operating procedure or process which is defined in every in the transaction level. Otherwise, it's very difficult to see that it is whether it's followed or not, because in a process management, whether it is in a service industry or a manufacturing industry, I think BOT has also been referred to. So without the definition of the process, it's going to be tough to control, or it's very difficult otherwise, because we are not machines. Humans, even with the process we tend to make mistakes. So with the process, if we follow, probably we may not make a mistake. So audit follows that SOP. That's my humble opinion.
Yeah, no, I think you're right. Just wanted to add, I think the question was, if there is no SOP, then how do you, perform such IFC audits? So the point I would like to highlight here is that, not necessary that everything would be documented, because many companies, they prefer to do things without documenting because they know that people know the process and hence it is done. But having said that, I think when an IFC audit commences, the best way to do this is get this off the ground is have your interviews, have your walkthroughs, process walkthroughs, etc. Document what you understood, and the walkthrough documentation can be signed off by the process owner. In such a case, you can take that as your standard operating procedure, because that sets the base for your controls testing to happen at the subsequent phase.
Fine, well said.
What would be the role of the internal auditor in vetting such business model or providing inputs in developing the model? You're talking about, if there is a change in the business model, what will be the role of the auditor in vetting the business model? I think, see, we don't necessarily have to get involved in, looking at the business model, but I think what we look at is, if there is a process associated with the business, I mean, which is new. For example, you are setting up a new warranty claims process, assume, then the audit function may be called upon to evaluate the controls as is being established, so that if there is anything that is manual in nature which can be automated, whether that is taken into account or can be that's a suggestion that the internal audit function can provide, number one. Number two, what are the checks and balances and the risks across a process which the internal auditor can evaluate and give the recommendations on. So I think the business is, if you're talking about mature companies or mature organizations, I think the audit function typically partners. But if you're talking about a very unstructured company, I mean, let's go back in time when I was working in Flipkart. Flipkart had dynamic processes, and when you have dynamic processes and dynamic business models, it is not easy for the audit function to play a very robust role there, unless of course you are only called to do the documentation of such processes, which never happened at that point in time. Things could have changed now with Walmart being the largest investor there. But what I'm trying to tell you is that in a very agile business environment where the models keep changing, or the business decisions to run the process in a particular way keeps changing, the audit function may not necessarily be always be abreast of the changes. So sometimes it could come as a post facto through the audit itself. So vetting a business model, if you're called upon, please do. But I think such occasions are rare. Will machine learning and artificial intelligence take over audit observations and opinions where physical presence and valuation of security is discounted or liquidated? I don't think machine learning and artificial intelligence takes, when you're referring to whether they will perform the audit of internal audit, but I think continuous controls monitoring is a form of machine learning. I mean, you can build in the algorithms and generate reports, but the human element cannot be discounted, because if you have to give an opinion, it will be the human element which will provide an opinion. And maybe technology could advance to a stage where they can completely replace the humans, but at this point in time, that is really not envisaged.
Fine. The last question seems to be, due to COVID, we can see automobile industry prices going high or low. I would say it's stable so far. I think there has been a pent-up demand in the first few months after the COVID, lockdown relaxations, and the pre-owned cars, as our Central Council member started saying, Mr. Sharma, there's been, I mean, all the cars were sold, or rather, there was no car available in the end of December. But new cars, new models are still coming in, and I think the fact is that prices tend to go up because the steel price have gone up. the Indian rupee valuation, the imported cars still seeing, the valuation difference. So prices will be a little bit high. I think the beginning of the month we have seen that Mahindra and Mercedes increasing the prices by at least 2 to 5%. So
Yeah.
other cars we don't know as of now, but still to follow. But the point is that it is no longer a luxury product, because each and every segment the cars are available now. The entry level to the maximum, the EQ cars have been introduced by Mercedes. It is costing, I think, 1.5 crores now. And the outlook is that they are building a car which will, one charge, it will go up to 700 kilometers. And it's going to be the, and I think to start with, there was some discussion about EQ. We are not touched about that electric cars or electric. I think probably a new. I think I would request Mr. Abhishek Murali to sponsor a session, especially on the electric segment, because it is a very big subject as of now. It's at the nascent stage, where the electric scooters are coming in a, inroad into the market, and the hybrid is off the way. I think it's some more time. It will take another 4 or 5 years to stabilize, but I think it will come, not very near future. But we need to have a session on this separately, because the whole thing will, parameters, everything will change when the electric automobile electric is going to hit in the automobile industry. Yeah, thank you very much for this good session. Nice interaction.
Thank
We were
you.
able to air personal views as well as the views as we experienced and as we have seen in the last 10-15 years. I think a lot more sessions like this will give us an opportunity to interact with our fraternity and give our ideas or whatever we experience. And thanks a lot. It's Ms. Venkataraman ji. Thank you very much.
Thank you, Mr. Ravisankar. It was a pleasure listening to you as well. And of course, thanks to SIRC for organizing this session. I think really enjoyed the opportunity.
Thank you so much, Ravisankar sir and Venkataraman sir. It was our privilege to have both of you with us, and I think your experience and your practical insights in the industry for several years, decades, I should say, was truly on full display here for our members. And I think we had a lot of good takeaways from here. And definitely, Ravisankar sir, we will definitely plan a program for the future impact, because as you rightly said, even the government are now pushing for EV. And electric vehicles is going to be the future.
Yes.
Definitely, it's already become common parlance in US, and people are driving electric cars regularly. So India is also going to see that soon. And I must say, since many people in the south are close to automobile industry, either as auditors or in some format, some work we are doing, I think ancillary units, all that are also going to get affected if there's a change in EV. So I'm sure all chartered accountants who are either practicing or as employees, both of us will be very, very intrigued to know what your insights are on what is the future for that. So we will definitely plan a session based on your availability, Venkataraman sir and Ravisankar sir. So thank you so much for your very valuable time today, a very valuable session.
Pleasure. Thank you so much.
I also want to thank all the participants.
Have a great year ahead. Have a great year. Safe, be safe. Yeah. Cheers.
Thank you.
Thank you.
Sir. Thank you all participants. Stay home, stay safe, take care. Thank you.
Thank you. Thank you.